Wiggle room. What exactly is wiggle room? Well, that's what I want to explain here in this basic yet powerful idea within the world of day trading that could be one of the main causes of why you find yourself struggling and it seems like your win rate maybe isn't as high as it should. But I want to walk you through what wiggle room is, and then if you stick around, I will show you a real life example of this. And in fact, by using this principle of wiggle room, I was able to make myself $500 in under 30 seconds. I know it kind of sounds a little bit iffy, but I'll show you that in a little bit. But let's just first start by setting the context of our job as traders, which in many senses is like our job in the real world. One of our main jobs is, you know what? Let's not be one of those awkward people.
Okay, cool.
And that's what we're taught growing up, right? You don't go stand next to somebody within 2 inches of their face. You want to give people space. And that principle applies into the world of trading too. We want to give the price space. We want to give our trading plan space, or in other words, wiggle room. Maybe you've heard someone say, you got to give it room to breathe. All these are saying the same thing. You don't want to be too uptight within a trading plan because that's what's going to cause you to have these situations where you're thinking, oh, I was right, but I ended up taking a loss, or oh, I was right, but I ended up getting out too soon. If you've ever been there, no worries, you're not alone. Any honest trader has been there probably multiple times. So what is wiggle room within the world of trading and specifically within the world of technical analysis where you're using technical charts? So when you're building a trade plan, you're going to have some sort of area, and I'm just going to use that green line, and that's going to be the level that you have identified as support, right? For whatever reason, you're thinking, you know what? I think that could offer some support to the price. Well, another part of your trade plan is, okay, that might be your entry point, but where exactly are you going to get out? Where is your stop loss going to be? Which is a must-have. If you want to manage risk, you need to manage risk. You need to have stop losses. But where is it? Well, that distance below the key level that you've identified is going to be what your, let's just call it WR is, what your wiggle room is. In some situations, and this was me, you'd say, okay, well, if that's where my entry point is, I'm going to put my stop right there. And you can see that distance right between those two lines, very, very minimal. In fact, there's basically no wiggle room there. That's a very awkward situation. If you are that close to the level that you've identified as important, very, very awkward. And remember, we want to avoid being awkward. But where is enough wiggle room? Well, that's always going to be a case-by-case basis. But at the end of the day, we've got to give the price some space.
Back off, man. I'm a scientist.
On the flip side of things, maybe you've identified, and I'm just going to use red for resistance, right? You've identified an area where you think could be a resistance level. So once again, what would be the wiggle room on this one? Well, if you are wanting to put a stop loss right here, for example, well, you know what? That amount of WR wiggle room, that could totally be suitable because notice it's much different than the situation where if you're like, you know what? I'm going to put my stop loss right there. Again, very, very tight, very, very awkward. But wiggle room is the space you give the price to fluctuate around one of the key levels that you've identified within your trade plan. And by extension, your wiggle room point actually becomes a very important level within your trade plan. But in order to get to the wiggle room, you first have to identify, some sort of key level. That could be a resistance. It could be a support. Maybe it's a moving average. There's a multitude of different areas or things that you could say, you know what, that thing is important for whatever reason. But now that you've identified that thing, you got to figure out, all right, well, what's the wiggle room that needs to be applied here? There needs to be wiggle room and it needs to be a suitable amount. Again, that's a little bit case by case, but one of the big problems is very, very minimal wiggle room, if any wiggle room, and that's just not a good situation. So let me walk you through and show you how this helped me stay in a trade and then ultimately have some great results. Now, before we get to this trade, just in general, if you're not aware, you can make money when prices go down, and that is known as going short or shorting. So yes, believe it or not, if a price falls, you can make money. And that's what I'm looking to do here. I want to actually see the price go down, and that will allow me to make money. So on that note, I have identified the thing, quote unquote. And the thing in this situation happens to be an area of resistance right there. So resistances tend to knock down prices. So that's why that's catching my eye as an area where, if I could get an entry point right there, that would be fantastic. And that's what I'm going to try to do. But now we also have to move into, okay, well, how much wiggle room does there need to be, or should there be? And at the premise, remember, there needs to be wiggle room. So if I were to just said, you know what, I want to get in right here, that's resistance, so I'm going to put my stop loss just slightly below it right there. Notice, again, barely any space. That's an awkward spot, but I gave it more wiggle room. And as far as where the wiggle room was, I'm not going to get into all that because there's several different dynamics that go into there. And I don't want to, that's kind of outside of the scope of this, because the scope of this video is, again, in the title, Day Trading 101, is just understand the fact you better be giving yourself wiggle room within a trade in and of itself. So on that note, that's what I caught, and actually, let me leave that red line up there because you're going to notice, spoiler, that the price actually goes up through there. But I don't move out of the trade because, again, that's why you want to give some wiggle room. So let's get this trade going. And before I do, also, I'm doing options here. If you don't know what options are, comment below option guide. And I will link you to a free class put together called the Big Base of Options. So just keep that in mind. And the main thing I want you to be watching is actually right here, because you will see the price go up through that red line. And then also you can keep an eye down here if you want, and you'll notice some prices and numbers start to fluctuate down here as soon as I get filled. But again, the main important part is right there up at that level. So let me get that red line back in there though, and then we'll get this party started. So I am in, and right there, I'll pause it. Notice very clearly the price has now moved up through that level that I thought was going to be an important area. But that's why you want to have wiggle room, because had I had a situation where I had, my, stop right there or something very, very tight, I'd be out of the trade. I'd be totally out of the trade already. And well, let's just see how the rest of this plays out. So it's just hovering up above that red line, which again was basically right there. And watch this down here. When a number shows up there, that means I've been able to get out of the trade. And when that turns green, I've been able to get out of the trade. But just given it patience, given it time, and just like that, I am out of the trade. And as you can see right there, that was for $500. And just, I know I made a pretty bold claim earlier, $500 in under 30 seconds. Well, you can see the times right there, the execution times. I was in at 11:03:03. Out at 11:03:28. So 25 seconds, $500, all made possible because instead of panicking out, freaking out because the price went up above my area of interest, that red line, because it had wiggle room, it kept me in the trade and it allowed me to make that 500. And that's what it's all about. We need to do our job as a trader, and that is don't be awkward.
What'd you do, my job?
So I hope this helps. I hope this gives you something to now focus on and build from, or maybe gives you a little insight into maybe some of the problems. Were you a little too tight with those stop losses? Did you just think that if my area of interest is at, and I'll just make this up, my area of interest is at 10, then I need to put my stop loss at, $9.99 or something super, super tight where you're awkward, you're not giving the price any space. So take that information, take that wiggle room and start to implement it into your trades. Because you're going to notice that, yeah, maybe sometimes you take a little bit bigger loss than had you given it no wiggle room. But in many other cases, you're going to be getting knocked out of trades to only have the price go in your favor and then potentially give you a winning trade like you just saw in the example I gave you. So if there's any other questions or anything like that, please leave those down below. If you have any other suggestions for videos, again, leave those down below. And I do read and reply to all comments. And if you don't believe me, I'll put them to the test and I will reply to your comment. So thanks for watching. Get out there, put in some wiggle room. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.